Rishi and Adam, welcome. We're going to hear a little bit about who you are, but first we're here mostly to talk about FairScale. So I want to know just immediately, pretend I'm a retail investor. Why should I be jumping into the ICO for FairScale, which is happening right now? Over to you, Rishi.
Yeah, so the best way I can put this is InfoFi is dead. We have built reputation by. The huge difference there is nobody in crypto knows who to trust. All you see is a wallet. You don't need to know who's behind that wallet, but what you should be able to know is, can you trust, or is the person behind it credible or reputable? So we built the infrastructure to allow protocols to do that. Farmers are driving airdrops, bots are sniping pre-sales. Actually, with FairScale, protocols can integrate our infrastructure to understand and assess risk at the point of interaction or distribution on Solana.
Nice. Now, right now, earlier yesterday, Trove did an ICO previously, and then they shifted over to Solana. It was absolute exit scam. And for anyone who doesn't know, just a quick little update, they raised like 11.5 million. They extended their ICO. It was going to be on Hyperliquid. They moved to Solana, and then not the ICO, but they launched a token. Launched a token of 20 million market cap, and it dipped down to like 355,000. They pulled all the liquidity, and it shows a beautiful reason on why ownership tokens should exist and why like decent ICO should be the only thing that you have your mind on. Can you tell me how FairScale would have prevented this situation?
Yeah, so FairScale in two ways. The way I look at ICOs is the person who is creating the ICO, or the kind of owners or deployers of the token, one should be able to know and gate access to who can actually buy into that ICO based on reputation or credibility. And the flip side of it is FairScale isn't just for protocols to use at the point of interaction with retail. It's the other side. You know, if the Trove founders had a FairScore that people could see, and that FairScore was, very likely going to be really low, people would think twice about investing so heavily in a project like that. It could have very easily been avoided with FairScale's infrastructure, and that's exactly why we exist.
Brilliant. Well, before we go any further, can you tell us a little bit about yourself?
Yeah, so I am the co-founder of FairScale. I started building FairScale around 12 months ago. The real reason for me was I knew crypto is a special place. I know it's the future, but 99% of my friends who kind of don't really want to touch crypto didn't realize that. And the main reason was because they can't trust it. And really the goal for me, and the continuous goal for me, is if I can create an infrastructure that improves trust and allows new users to enter Web3 and have a place where they can understand actually who I can trust and what I can trust. In short, if I could go to the pub and speak to my friends about crypto and they would enjoy hearing about it, I've achieved my goal.
Nice. So essentially the point where you think you've made it is when your normie friends can have a conversation with you in the pub, and they're not just saying, "Oh, can you just stop talking about all these scam things?"
Yeah, exactly that.
Well, that's a good goal. That's a goal that has product market fit because no one's built for it yet.
Yeah.
So obviously it's not just you, and ultimately before people jump into, ultimately people should do a little bit of research or have an idea of what they're getting into before they jump to a token or project, or in this case, an ICO. So can you tell us who's on the team? What are they doing? What are their specialties? So that we have an idea of we're trying to back a team and not just a bunch of anonymous PFPs on Twitter.
Yeah, absolutely. So I'll start with our CTO. Our CTO, Mohammed, is based out in South Africa. We've worked together for the past 6 years across a number of different things, either just kind of passion projects or really supporting other founders. And he is an ex-Afrinic governance member. He's extremely senior in a security infrastructure company out in South Africa. The one thing I would say about him is he is one of the most cracked people I've ever met. Like, he finds a way to do things quickly and efficiently, and he is the reason we were actually able to build FairScale as infrastructure. The way we've been able to capture data in a matter of seconds, with frankly not a lot of funding behind us until this point, which is exactly why we're raising capital right now. Nothing would have been possible without him. Moving on to really the kind of engine behind FairScale, which is the data science team. So we have 2 data scientists on the team. Rachel, who was on the Shark Tank yesterday. She has a PhD from Oxford in data science, and our other data scientist, Rob, has a master's from Birmingham University in data science as well, specializing in neural networks. And that's really what sets FairScale apart. Like, anyone can create an algorithm to say, this is, I'm going to weight social scores as 10% of a score. The way we've been able to do it differently, specifically because of these 2 team members, is we have an algorithm. It trains itself. It's a neural network. And as more data comes into it, it validates and becomes more accurate across the entire ecosystem. And then finally, our CPO. So we actually met, he was our latest kind of C-level hire. He was building a company called Dapping, which was essentially the same vision as FairScale, but he had everything that we didn't yet have. He had all the off-chain and social data, and we'd really perfected the on-chain model. We had a conversation. The stars really did align. And we basically said, like, look, why don't we just join forces and do this together? And he came on as our CPO. He's ex-DevRel at Reactive Network, which is really exciting for us because a real key goal here with essentially reputation as infrastructure is this week we will actually be releasing our developer program. We'll be offering our SDK to a cohort of developers on the Solana ecosystem to build with FairScale as infrastructure. And that's his specialty. That's exactly what he did for Reactive Network. And he's the perfect fit to really execute well on that for FairScale.
All right. So that's the team. Before we go any further, can we have a quick look at what like a FairScale score looks like for somebody that hasn't seen it yet? Adam, we'll intro you in a second as well, but will you be able to have a look at yours?
Let's check it out. So I've connected my X and my wallet address, and I'm top 7% of Solana users. That's not bad. For context, I have used this wallet address for a lot of trading, not this year, but late last year, around the so-called AI meta, the first one.
Okay.
The original AI meta. I've used this to deploy a token on Pump Fund, which the story of that I'll get to in a second as it's relevant to the origin story of Star. This token did a lot of volume, a lot of attention, reached quite a market cap. And I think for context on socials, I'm quite active. I tweet almost daily, try to really come up with original content, high signal stuff. I do my best, let me put it that way.
Nice.
And this is my score. So Rish, maybe you want to give some context as to why I'm not at 1,000.
Can we have a look at your profile? And I understand, and just so the viewers understand, like this is an MVP. So this is, stage 1 of, I imagine, many stages.
Yeah, so for context, there's 2 things here. A high score, one, is extremely difficult to get. There's certain things that you have to actually achieve to unlock the next step. And that's either on the off-chain signal side of things, it's your ecosystem behavior in terms of how you interact with certain protocols on Solana. Like you can see here, a recommended action for Adam is actually if you were a Solana staker, that's a real positive contribution, and you would get a score boost there, and quite a significant one. And that's really what we're looking for is to avoid the system being gamed. The kind of top people will all fall around that middle point, because actually, if you're better than most, you're trustworthy. I would want to distribute a token to you, for example. To really get to that top kind of 1%, you have to be Solana stake, interacting with vesting contracts. A lot of humanity goes behind it as well. But yeah, this is an MVP. So like we said, the model trains itself. We have about 3,000 verified users in the first week of it going live. So the more we do that, and actually the really special thing with us is to get people to have a fair score, they don't actually have to come to this MVP. When we integrate with our first cohort of partners like Streamflow and even Star, because we score at the point of interaction with another protocol, that 3,000 database grows exponentially as those integrations actually kick off over the next week.
Cool. Well, I think I've got a couple of questions based on that a little bit later. But this, for starters, just to give people a visual understanding of kind of what it looks like. And then links will be below. They can connect, create their own score as well, and see the changes as you push more changes. So thanks for that. Let me ask the next question, move on to a next question. So let's chat to you, Adam. Just quickly, just who you are, why you founded StarDotFun, and maybe like a 30-second elevator pitch on why Star exists.
Yeah, of course. So my name is Adam. I'm the CEO and founder of Star. I'm a serial entrepreneur. I come from a family of immigrant entrepreneurs, and building our own things is all we ever have known. And so I've done many different projects, from e-commerce to AI, SaaS. I was also in the music industry for a while, doing event marketing, which probably a lot of that you see bleed over into what Star is today. The origin story behind Star is it's quite short. Me and my co-founder, who I've built a few companies with in the past, we, out of a mere experiment, we decided to launch a token on PumpFun for an open source reinforcement learning framework he was building. Short to say, the experience was anything but fun. There was no mechanics for raising capital. There was no mechanics for retaining value in the token. It was we're literally thrown to the wolves. And by the end of that experience, we basically asked ourselves, like, why was there no better platform for us to launch a startup on, to actually raise capital, to acquire a sustainable base of investors, people that were bought in, and to build a platform where the token actually means something. And so that was the origin story of Star. That's where the idea came from. Over the course of the last year, the ideas evolved from a platform where founders are vetted before they can fundraise to essentially a social investing platform where founders can raise money directly from the internet without needing to go through gatekeepers, i.e. VCs, funds, etc. And our vision is basically a world where founders can go, turn on their computer, and raise money directly on the internet. And I think the final thing I'll say about Star is that we really aim to change the way that capital formation happens, and enable people to get true early stage access to interesting startups, and not just in a speculative manner, but in a manner that conveys real ownership rights. And I can go much more into our take on decision market-based governance down the line, but that's the short pitch.
Nice. Do you want to quickly show us a little bit, just like 15 seconds or so, of what the platform looks like, and then we can go back to it if needed. But just for the first time, people having a look, there's one thing that I think is really, really great is you have I think marketing is very strong, like probably one of your strongest suits that you've learned from the event space. Right. And so you've got like great engagement videos and like a really clean UI, but maybe you can tell me a few details on this.
Yeah. So basically the reason why the UI is the way it is, which we kind of describe as like a baby child between Twitch, Kickstarter, and the NASDAQ, is because on our first ICO, we dogfooded our own platform and we raised for Star for the platform itself. And at the time, this looked very different. There was no live stream component. There was no giant video. It was more of a static information like page. And we had a 7-day fundraise. We set out to raise $500K. On the first 6 days, we'd raised a grand total of $10,000, and we're very far away from our target. And mind you, we'd spent like 3 months building a platform, ideating. We put a lot of effort into it. So it felt like we were getting set up for a grand failure. But at the same time, we were 3 founders in a room building nonstop, having conversations just like this with founders. I was doing podcasts. We were on email newsletters. I was speaking to investors. Like, if you were a fly on the wall in the room and you looked in, you would see 3 people that really gave a shit and wanted to see their vision come to reality. So what we did is we turned on a live stream, and this was exactly the view of the room at the time. That's my co-founder, Doug. That's our CTO, Darren. And we turned on a stream to show people what the last, I think it was the 48 hours of the week were like for us. And something interesting happened. As soon as we turned on the live stream, the audience that started coming in, they started sticking around. They started asking questions. And I think you alluded to this earlier, like in a world of nameless and faceless characters, humanity means a lot, right? So basically what happened, and this is the celebration clip of us hitting 100K funded, is in the last 24 hours, we raised 500K. And that ended up being the idea, the seed of the idea for this that you see here, which basically is looking to combine finance and entertainment in a way that just hasn't been done before. Like typically, like, angel investing is very dry. It's, you send a safe over, you sign a safe, and then money's transferred. But we're really trying to turn it into a very social and engaging experience. And that's kind of where the inspiration for the platform came from.
That's nice. And when did you raise your token? When did you do your ICO?
We officially launched our token on July 1st of 2025.
Oh, okay. July 1st. So your ICO was a week prior to that?
The fundraise was the last week of June, and then it ended on July 1st. Yeah.
I see. Well, I've only just recently heard of StarDotFun now, but I imagine you've done a lot of shipping in that last 6 months or so. So good work.
Yeah. It's been a lot of iterating and learning. I wish I could show prior versions of the UI, because it's really interesting to see things that we've tried, things that didn't work, things that have come in. I mean, the chat is something where you can basically see live buys as they come in. This is something that on our first raise, we had just people coming in and saying very negative things. So we were close to abandoning the idea. But then for future events, we just saw that people were actually using it in a very meaningful way and asking actually thoughtful questions or conveying their support. And that the fact that you can see each purchase comes in reinforces positive sentiment. So this is something that's kind of become a core pillar. And that's why you see, probably you look at this and you see Twitch or some sort of like a skeleton of a live streaming platform.
Well, it already looks better than Pump.Fun, to be honest.
I'm glad to hear that.
I don't
people
have
have called us the Pump Fun for smart people.
The Pump Fun for those that don't want to have epileptic fits.
Yeah, exactly.
Yeah, nice. So look, I don't think we've got time to talk about your token, but just to check on a few things. So you've done FairScale is now the 3rd launch. Is that correct? Or how many launches have you done so far?
Technically, FairScale is the 5th launch.
Okay. And so why should people trust StarDotFun? What standard of protections make this safer than typical launch platform?
Yeah. So I think it's important to note that we see Star as the fundraising and experience layer. So where the interaction between the startups and the investors really happens. And that's what we're building for, to basically create this exciting, very social experience. And with respect to investor protections, we partner with a number of different providers to basically provide and enforce tokens with a sense of ownership or to convey ownership rights. Most recently, back in December, we partnered with Combinator, who are essentially building futarchy infrastructure. So what you see on MetaDAO, the infrastructure that powers the decision markets and the proposals, Combinator is looking to democratize that technology and make it accessible to capital formation platforms, startups to use it in their own way on their own products. And so we've partnered with them. Essentially, the way it works is teams raise on Star. Once the fundraise is complete, the money is transferred to a treasury, which is governed by a Combinator futarchy. They receive a monthly allowance.
What does that mean, governed by Combinator futarchy?
So I think the TLDR on futarchy is essentially that rather than token holders voting on what should be done, they trade in markets, which basically are determined by what is the better outcome for the token price. So FairScale's token goes live. FairScale wants to make a bold decision to invest $150,000 in acquiring a new data pipeline. Rather than just simply being able to make that expenditure without the stakeholders, which are all the investors that have allocated capital, they create a proposal. There's essentially two markets. One is if the proposal is going to fail, and one if it's going to pass. And people trade both markets to find the most optimal outcome based on what they believe will be the outcome on the token price. So, yeah. And then the market that has the highest price is the one that ends up getting resolved. And traders can actually be rewarded for trading the right decision. And your bet can be profitable or not profitable. And I think
so the treasury is held by this, in the treasury, the funds are in this treasury, and this vote, which we call a trading proposal, passes. How are the funds moved? Do we have to trust third parties? Is it like a multi-sig, or how does that work?
Yeah. So for full transparency's sake, currently the decisions of the futarchy, they're interpreted by the Combinator team through multi-sig, and the outcome of the decision markets determines whether the multi-sig gets signed or not. So if Rishi wants to increase his allowance to $100,000 a month, and the futarchy says yes, then at this moment, a multi-sig will be signed to do that. But very soon, the decision market will directly sign the multi-sig rather than needing to be any human intervention in between, if that makes sense. So, yeah.
This is obviously, like, I would say, heavy inspiration from MetaDAO. I am a big believer in MetaDAO, although MetaDAO has a problem where they can't do many launches because they're still finalizing. They're very tech heavy, I guess, and just trying to perfect things and trying to work out their system. And I don't necessarily see that, like, I guess in some ways you're competition, but at the same time, like, there's room for a couple of really decent launch pads, because my belief is something that gives you an ownership is far more valuable than like your pump funds or even your traditional style. Great products like Jupiter and Camino that I use every day. Even Meteora, these things I use all the time, yet the token is actually separate from the equity and the revenue and the decision making and all that kind of aspect. So I believe that, there's a synergy for anyone willing to tackle this ownership problem. But what other benefits could you say that why should a founder choose StarDotFun, and why should an investor choose to back the projects on StarDotFun?
Yeah. So, I mean, from a founder point of view, right? Like, I've been building FairScale for 12 months. I'd been through trying to raise privately, all this kind of stuff. I was even in talks with the MetaDAO team, with the Metaplex team as well, who on the Genesis side were, one of the biggest launch pads around. And when we met the Star guys, we were in the middle of figuring out how we want to actually raise, whether we just go down the token route or whether we go down equity and token. And we had an initial call with Adam, and he just gave me some really unsolicited advice to say, have you considered launching token only as an ownership token? And we did a lot of research on it following that call, and actually, kind of decided, yes, let's do it. It just made sense. So we actually reached out back to the Star team. We weren't planning on tokenizing anytime time soon, and we reached out to the Star team and ended up going and spending a few days with them at Breakpoint as well. And one of the key things that we realized was these guys really do go to war for their founders. I think if you look at MetaDAO, they are great and they have a great platform and their launches do very well. But at the moment and where they are, I don't think they would be able to fly out and spend a week with every single team that they launch. And I think if you look at the past few days, specifically with the FairScale launch, Adam and the team have flown out to the UK alongside my team. There's 15 of us in the same building. We've just been grinding. We've been up till 3, 4 a.m. every night for the past 4 days, just making sure we're ready. And we're spending the rest of the week together as well, right up until the token launches. And it's that mentality that one sentence, I think, completely encapsulates why anyone, or especially in my view, would benefit from launching on Star, which is they go to war for their founders.
I like that. I guess one thing is, Adam, if you have the success you're after, you're not going to be able to quite do that. But I guess maybe you have like a team member that flies out in the future when you start to have a lot of launches.
Yeah, I think the path to scaling the number of launches is going to be an interesting challenge. But for now, we really do go all in for every team we work with. We create content for them. We work together on pieces like you see on our website. We organize live stream Shark Tanks, which basically puts founders in front of up to 50,000 people and a panel of experts, VCs, other founders that are relevant to their business and can actually help them beyond just capital. So we really try to kind of support them in all of the ways that are ancillary to just the money in fundraise ways. And I think in the next few weeks, we'll see a lot more interesting features come about from the combinator side. We're actually not just building like few target mechanisms, but also what they call quantum markets, which essentially is a type of decision market that allows you to not just trade pass and fail outcomes, but to trade between 6 different outcomes, or trade a market to determine a specific amount for something. So what's cool about us partnering with Combinator is that they can think very deeply about how to create better decision-making between founders and investors. And we can really focus on the distribution and the marketing. And together that forms a very powerful combo where essentially they're getting like a boutique experience on the fundraising and the distribution side. And then when they go to the Combinator team, they're getting a very boutique experience with how to structure the decision market, what rules to put in place. If they want to enforce like a grace period after a raise to prevent a buyback within the first 30 days, they can do that because the Combinator team is working side by side with every team that they're bringing onto the platform. So I think this is like something that obviously will be harder to scale, but right now, every team we work with, every founder that comes onto the platform, we consider them almost like a co-founder. So there's a level of service that you wouldn't get if you're number 18 in the queue or just launching of your own accord permissionlessly on a platform.
Nice. So in order to like maybe sum that up with just a couple of sentences, so why should people use StarDotFun as a founder, and why should people back the projects? Like, what is your competitive advantage? Just in a nice summed up bite.
Yeah. So we do extensive due diligence to find interesting projects that aren't part of a current narrative, but are helping to create a new one. FairScale being that for the reputation FI space. They're the only way you can get exposure to reputation on Solana right now. Founders should launch in StarDotFun because we offer a level of service that is kind of unprecedented. As a founder, you get to pitch in a Shark Tank in front of 50,000 people and sharks who are genuinely interested in what you're building. And then finally, there's the decision market infrastructure where teams basically get to convey ownership rights through their token through a structure where the treasury and the protocol IP are governed by decision markets.
All right. Thank you. All right, Rishi, back to you. I've got some more questions. I'm going to kind of change them slightly just because it's come up a few times. But yesterday there was a Shark Tank, and well, both of you, you're welcome to let me know how did it go. The basic premise was along the lines of you got 5 minutes to pitch, then you got 4 people that are chronically online on crypto Twitter, they have their own success, and they're just there to grill you to decide at the end, are they going to enter into the ICO or not? That was a gist, I think, but you give me some more info on how it went.
Yeah, so I think before we get to specifically yesterday, the build up to yesterday was one of the most amazing experiences I've had in my journey with FairScale. Really getting the whole team in one building from, I think there's seven different countries we've flown in from, like 3 different continents to one like central hub, essentially a retreat in the middle of nowhere in the UK. Really just preparing either on the pitch side of things, on the product side of things, on tokenomics, on kind of GTM in the run up to yesterday. And, all of that being said, yesterday, I essentially started to take myself out of the situation. And it was a really special kind of place for me to be, where all I needed to do was focus on those 5 minutes and the 25 minutes of questions thereafter. The last 12 months, essentially, of what we've been doing came up to that moment. So being completely honest, me and Adam had a quick chat before we started, and I was probably breathing a bit too heavily and shaking on the hands a little bit. But when we got into that room, we started the show. I was in a different on a different planet, just ready to execute. And overall, it went well. 3 out of 4 of the sharks said yes, they would invest, and one of them said, we want to just have a quick private chat before we press the button. And we're having that chat today, and confident that they will also do the same. 8-Bit, one of the panels, actually invested $3K live on stream in a kind of I'm in moment, which was a great feeling. So yeah, all in all, went really, really well. And we're all together for the rest of the week, ready to continue to do the same and end it strong.
I like it. And Adam, what was your kind of favorite part, or was there like a question that you really liked that came from the sharks, or maybe even from the live stream?
So I think what I love sometimes is like the absurdness of crypto and but also the realness that is in that absurdity. And so the moment when 8-Bit Penis expressed that he wanted to invest live in FairScale was like kind of like this, I guess like the epitome of that. To have like real things happening, but then with a anonymous investor who really cares about ownership coins and has such like a funny name and like an ironic story behind him. So that, I think that was my favorite moment. We've also been for a while pushing for this idea of the investments happening live, much like in Shark Tank, when Kevin O'Leary is like, yeah, I'm in. I'll put in 20K for 50% of your business. So that was really cool. I think out of the sharks, I was really excited to have Cause on the panel. I've been a really, really big fan of Time.Fun and what they built. I thought the primitive was like being able to speculate on someone's time, but then also being able to use it in practical ways, i.e. to book a call with them, is really, really powerful. And in fact, it's probably one of the big contributing factors to our early success, because I was able to get on calls and have chats with people like 0x Designer, Imran from Alliance, and a number of other people that had time tokens on their platform. So I was really excited to have him on, and I thought, him being currently working on Moolah, which is using net worth as like a net worth as a reputation signal, I guess is the easy way to sum it up. that was really cool because he really understood deeply what Rishi and the team are trying to build. And the questions that came as a result of that were like thoughtful and interesting and very curious. And that's exactly the type of interaction that I'd like to see, because it fosters like genuine interest and collaboration and founders together in the space kind of helping each other to move forward as a whole. It wasn't a very PvP dynamic. It was very curious and supportive. And that's the kind of Shark Tank that I also like to see outside of like being very critical and being very harsh, which can be entertaining to watch. This felt very wholesome and also, I guess, in line with the theme that FairScale is building in.
It also goes to show that when people on crypto Twitter are just attacking it every time, if you meet them in real life or if they actually jump on and have a voice to their PFP, they're generally nicer than what their words are when they're trying to just brutally attack, like 8-Bit Penis, who I like.
Yeah,
he's a real attack hound. So if you get him on your side, that's fantastic.
He's a keyboard warrior for sure.
Yeah. trained part of Penis Ventures is his funny company.
Exactly.
So I think we could probably go and show a little bit more about the FairScore and talk about maybe some improvements coming. Rishi, can you give us a little bit of a TLDR on how is the score? A few questions I want to get through, like how is the score calculated, the weighting philosophy, how often it updates. At present, you've got one wallet. What if you have multiple wallets? How do you handle privacy? That's some of the questions I want to get into. Firstly would just be the FairScale score. Like what would probably be deemed a good score for people to say jump into a hyped ICO? You gave the example of like Humidify's launch with Jupiter's platform and how it was just botted. I thought that was a perfect example. So I'd love to hear that again. And yeah, I'll hand it over to you.
Yeah, sure. So as a quick overview in terms of what the score currently comprises of, we have a number of different sub-scores. On the on-chain side, we have an economy score. This economy score is very much about how...
Adam, can we see the view profile as well? Thanks. All right. Sorry, continue.
Cool. So the economy score is essentially not just, how much money you have. It's how you're actually utilizing that money and what kind of tokens you're holding. So if you're using a lot of stables, if you hold a lot of stables and you're staking Solana, that kind of thing, your economy score will be better. If you're investing really small amounts and into a really diverse kind of thousands and thousands of tokens, your economy score is going to be relatively lower. And with all of these, we're not trying to say, if you have a high economy score, you are rich. What we're trying to say is compared to the database, what your score is like. On the risk side, that one is predominantly kind of proof of humanity, but not just the humanity side of things. It's how risky you are as someone that I would distribute tokens to. So one, if your transactions are really, really close together, within like milliseconds of each other and constantly doing that, it's very likely that the wallet is a bot. But here we also look at the token hold times, things like this, to actually assess, is this person, actually, if they are a bot, are they holding tokens for a really long time? Because actually, that's not a bad behavior, right? Like you can use bots for a positive action. Activity side of things, this is activity and contribution to the ecosystem in general. So this is things like staking Solana, it's interacting with vesting contracts, it's holding certain types of tokens, so ownership tokens being one. Diversification, that's actually how you interact across the ecosystem from a protocol or platform point of view. So if you're like really just drilling down only on one, for example, Pump Fun, like if you're just all in on Pump Fun, your diversification score will be low. And then moving on to the social side, that is, we've been really purposeful with how we look at social and really not wanting to go down the info-fi route. So here we're not just looking at engagement or how many followers you have or how many smart followers you have and all that kind of bullshit. We're really just looking at what is your sentiment like? What is the sentiment about you like? Who you're interacting with from a point of view of building FairScale into an ecosystem is one of the improvements that we will be making very, very soon, which is essentially what your network looks like within the FairScale ecosystem. So how many like high scoring individuals are following you or interacting with you and that kind of thing. That's the gist of it. As if we were to go on to thinking about weightings, so the way we've gone about this is we don't necessarily decide the weightings. Our model decides the weightings itself. So depending on how much data is in the model and essentially like a normalization of scores, sub-scores across the whole model, that determines weightings. It updates every 24 hours at the moment. So every 24 hours, your score will update depending on your activity for that day, but also the activity of new people who have come into the FairScale ecosystem. Now, of course, as we start these integrations, that model is going to revalidate, it's going to rescore because thousands and thousands and thousands of more people and interactions will come into the model. And then I guess on one of the challenges that we've had, which was an expected one that we were kind of ready for was, I mean, obviously just because this is an MVP, but in an MVP, in a really early stage platform, users aren't always going to want to connect their best wallet. They might not trust the platform or they just don't want to connect their wallet or their socials. So the first step there is that we have actually just agreed an integration with Matrica. So you'll be able to log in with Matrica on their landing page and automatically connect all of the wallets linked to Matrica as well as any socials if you choose to do so. One that obviously just kind of people will trust Matrica more than they trust us at this moment in time because we're new. We understand that. Two, it opens the door to the next wave of data pipeline points, which is things like Telegram Connect, Discord Connect, Gmail is something we're thinking about. There's not really much data that we're going to play with there. It's more just a connection. And then even things like GitHub connections and looking at developer activity. And then the next step on that, which is one of the most exciting, just on Matrica as well. We are integrating with them to allow communities to be gated by FairScores. So essentially opening up the door for Telegram alpha chats that are locked only if your score is above 900, for example, or Discord communities that no longer rely on you holding an NFT, but rely on your credibility.
Right.
A really exciting thing for us to be doing. And then finally, in terms of next steps, one integration that we're looking at very soon is with Privy. So the way I look at FairScale is it's not just for someone to understand their previous behavior and kind of know what that behavior unlocks. Where it becomes really special is, and this is how my goals come into this in terms of, me wanting to onboard my friends. It's they come to FairScale as the first point, like your first entry into the Solana ecosystem. The first thing you do is go to FairScale, connect Privy, create your new wallet, get your FairScore, which won't be high. It will be because you won't have any activity. But the first thing you should do is get that FairScore. You then kind of that travels with you across the ecosystem as you interact, as you kind of learn how to do things. And Privy there is probably the way we'll be doing it in terms of one, safety, privacy, but also that like really nice user onboarding experience.
So one other cool thing that could potentially be done in the future is like also using this to hire. Like if a project wants to hire somebody, and maybe it's like a more of an entry position, like an intern or somebody a little bit lower without the credibility or the referral word of mouth. then you could ask for their FairScore, and that way you just know, all right, this person's saying they're going to go and write all these blog posts for me on DeFi, and they've never even used Meteora, so not a fit. Something like that as well.
Yeah. So one thing that we're actually building out this week, it will be done today, is our integration, like the way our APIs work and how we integrate with other protocols at the moment is just giving them one score, your overall score. And actually, Adam and I have had multiple discussions about this too. What we're wanting to build and will be building is the ability for protocols to see the subscores as well. And then actually use our model as infrastructure to say, okay, actually, I want to find people who are more socially reputable, and I don't necessarily care about their on-chain credibility. So I'm going to adjust the weightings in the model myself to plug into my own protocol to attract social users and vice versa. And that's really how what we've built and the infrastructure we've built to actually pull data, score it through an algorithm becomes infrastructure. People can use it for anything. And like you said, Seb, hiring is something that we'd love to see FairScale used for. And exciting times.
And I guess probably the biggest use cases are like, hopefully we have a euphoric 2026, or at least some sort of excitement, right? Once the political scene kind of quietens down. But I'm guessing, airdrops would be a big one, and an ICO allocation. And I did want to ask, I'm just putting a bit of a reminder there, I do want to ask about the DTF launch with Humidify in a second. But first, how, you mentioned in yesterday's Shark Tank session that you will be subscribed, or you will get an allocation of FairScale if, once oversubscribed, depending on your FairScore. So that's a pretty cool thing that other people could use, like any launchpad could use. That information is correct, right? I didn't get anything wrong there?
That's absolutely correct.
Okay, and now, but then the other part of that is, given that it's still an MVP and, it will take time to iterate and improve some things, and it only uses one primary wallet when we go and connect, what should people be doing if they're excited to jump into this, if they see this as, the future? And I'll let you know my future, my outlook at the end of the podcast. But if they see this as the future of a trust platform that hasn't been ruined by Kaito and whatnot, then how can they quickly update their wallet to see if it's a more trusted wallet to improve their score? Because I believe there's a bit of a delay in fetching all the data.
Yeah, absolutely. So I think it's a great point. I think two things there. So we'll be airdropping 1% of tokens to users who invest in the ICO. So if people don't invest, no matter what their FairScore is, they won't be getting part of the airdrop. So firstly the wallet that will be scored is the wallet that you invest with on Star. We need to capture data points from that. So actually, if you go to Star and you connect your socials and your wallet, you're much more likely to get a higher score. If you only connect your wallet, we can only utilize the wallet, the on-chain data, and therefore there is a cap as to how high your score will be. So I would say that is the best way to do it. You can, I would suggest if someone wants to log in and check their score right now, to do so today. In 24 hours, your score will update and you can decide which wallet you want to use to participate in the ICO. But genuinely, the quickest way is, one thing I would say is at the end of every day in the run up to the ICO closing, we will be posting publicly the distribution of wallets and their scores that have invested in the ICO at that given point. Right now, there's a couple of 700, 800 plus. There's a few in the mid-range and there's a few in the lower end. I would say the few in the lower end are a lot more likely to be because they haven't connected their socials to Star. So that's the best way.
All right. And I want to touch on privacy again shortly as well. But first, one thing you mentioned yesterday was perfect example of how much better Humidify's launch on Jupiter would have been, which, like, I'm very excited. I like Jupiter a lot, but it was the most like rubbish launch ever. It was just completely botted multiple times. They just did an absolute shit show. Happy for that word to be included in this. And they should have known better. Both teams should have known better. Firstly, the tokenomics are just rubbish. But aside from all that, how could that have been improved? And people wouldn't necessarily know this, but it was botted exceptionally quickly. And dupe stakers would typically use a ledger, and ideally, if you've got a decent amount of dupe, and that you're at a slow down disadvantage because it all filled up in mere seconds, and it was botted on a couple of occasions, and potentially even the final thing was botted.
Yeah. So in short, this whole problem would have been resolved if FairScale was used in this scenario. So the way we work is, the whole point of using reputation as infrastructure is that you can use FairScale and its scoring model in any way that you like. I would probably say what Jupiter should have been able to do with FairScale is actually gate access to the pre-sale to the launch based on someone's FairScore. What that would allow you to do is, if someone has a score of 0 to 100, in the FairScale eyes, they're very likely a bot. At the point of wallet connects to actually invest in a pre-sale, we can score near instantly. So even if someone is a 0 score right now, if at the point of the sale actually going live, if that changes, the score will adjust as that happens. It would have been a very simple solution. It would have been a gate of, don't let anyone in with a score of 0 to 100 into this pre-sale. And we can't, one thing that we're very conscious of right now is we can't say that we can absolutely certainly detect if someone is a bot. And actually, that's not necessarily what we want to do. We're not like a police force in that sense. But the very, very large majority of bots or cyborgs or technically just bad actors would have been avoided in that scenario. Yeah.
So essentially, you can get rid of basically any bot. And I guess this opens us up to the next question of if you need to connect your socials in order to get into something, like a higher chance of getting into something, how is privacy treated here if somebody doesn't want to connect their wallet to that? At present, my assumption is there's no way around it. There will be some sort of link. There's no like ZK tech or anything, but I'm just not sure.
Yeah, so I guess two things here is, in terms of privacy, when we give an output to a protocol that is using FairScale, all they see is a wallet address and a score. They don't see what, this X profile was connected, and this is all the actual transactional data that has gone into the model. We pull all of our data from existing APIs, like Helios, for example. If you were on the stream yesterday, we can come back to it, but a lot of people will know that one of our kind of big goals after the raise and what the capital would be used for is to bring all of that in-house. I guess secondly, on the connecting social side of things, there is a cap as to how much your socials can affect your score. Yes, if you want a really, really high score, then you should connect your X, your Discord, Telegram, and GitHub and off-chain activity, because that's really how we detect the most reputable or the most credible. And again, I guess going back to what I was saying in terms of how we're building out the APIs this week, we're allowing protocols to make decisions based on certain weights that they want. So actually, if they decide that we don't really care if someone has connected their socials in order to access what we're offering, they can just reduce the weights of the social side of things and really increase the on-chain side of things and tackle it that way. ZK is something that we're considering in the near future. We just haven't really kind of pushed forward on it just yet. We've got a lot more to do to perfect before we explore that.
Yeah, it's a big thing. It's a bit of a narrative, the privacy aspect, and it's needed, but it's not easy. Plug and play, fork some code and add it in kind of technology. So So right now, like there is no guarantee on privacy, which is like fine. There's no privacy, but you can, of course, just decide not to connect your socials. But then if you do connect your socials and you just like, okay, I'm going to trust FairScale on that, that's fine. Is there any chance that there's no chance that the socials would be shared with a partner like Castcard or Camino or anybody like that?
No, unless you. So the way we plug in is unless you want to actually go to Cast and they've integrated FairScale as an infrastructure and offer the Connect Wallet option, only then would that data be captured. Otherwise, if we give data to, if we feed the output of the FairScore model to a client, all they see is wallet and score. And we're very purposeful about that. You know, the big thing with FairScale is we want you to be able to assess risk and essentially know that you can trust the person behind the wallet without knowing who that person is. I guess it's, if you saw the kind of the sizzle video that was narrated by yours truly, one thing that we put together in there was meritocracy in a world where names don't matter. And that really does ring true with everything that we're doing.
Gotcha. All right. So moving on to our next question. There's a lot to unpack here. This is a very new thing. And I think, like I said before, a tremendous amount of product market fit. But the important question is, certainly with an ownership token, and it's a question for both of you, but like, do you have any revenue projections? Like who's going to be paying, protocols, users, or both? And it's a question for both Rishi and Adam, as I imagine there's some revenue model that Star is going to get out of this as well.
So by the end of 2026, we are expecting $2 million in annual recurring revenue. And that comes from our monetization from two different ways. One is B2B enterprise API integrations. So we charge per call on a volume basis, a monthly volume basis, structured between 0 and 1,000, kind of 5,000 plus, and then real enterprise level above 10K. In terms of actually where we are on that, you know, we've already onboarded our first cohort of integration partners with signed LOIs, who are now kind of, as of today, will be able to start integrating now that our APIs are production ready. A few names there are Streamflow. They will be plugging in FairScale at the point of distribution. So if you conduct an airdrop or vesting contract via Streamflow, a user will be able to see the score for every wallet that they're distributing to and actually allow them to make better financial decisions as to whether or not they want to actually conduct that airdrop to those people. The second way we actually monetize is, and this is where it becomes really special with developer SDKs. So we've built the infrastructure to allow users, protocols, businesses to actually pull data, compute it, and spit out an output of a FairScale score or combination of scores within seconds, near instantly. And we want that to be used as infrastructure. So something that we're really drilling down on is getting developers to actually build using FairScale SDK. That's where a lot of our team specializes in terms of our CPO as well, of being ex-DevRel at Reactive Network. We have really close ties with super teams and Solana events. We'll be hosting hackathons to really incentivize people to just build with reputation infrastructure. And of course, we monetize on that. The majority of our revenue comes from B2B enterprise APIs. But where it gets really special, and especially tying it all back to the ownership model, is users build apps powered by FairScale. They can build anything they want powered by FairScale as infrastructure. Owners of the token own the FairScale IP and actually own, powered by FairScale. It's a network effect, and it really just brings together the whole story of I guess, reputation buyers is how we're going to call it now.
All right, cool. Maybe some more questions there for a later date, but I mean, 2 million revenue by 2026. That's very decent for like a new startup. So that's great. Now, of course, Star, you're putting in all this help to make this a success. And ultimately, if you don't pay your bills, then you don't stick around. So how do you produce revenue?
Yeah, so we don't take our success fee on the funds raised. We exclusively monetize on deposits to the fundraise. So we take a 1% fee per deposit. This is to prevent massive oversubscription and essentially monetize the fundraise itself without taxing the team. And then what we primarily monetize is once a token is live and trading. We take a 0.5% with 50 bips on a trade. The team also gets 50 bips, and Combinator gets 17 bips out of this whole arrangement. So it's split 3 ways between the team, us, and Combinator. We do this to incentivize ourselves to build a healthy and long-term market for the token, rather than just being positioned exclusively as a fundraising platform. Because the eventual vision is to essentially build like a social network where there's many startups and many investors, and every new startup that comes on board contributes to the network. And old startups get exposure to new investors. So that's kind of how we're trying to design the incentive alignment. So yeah, that's a TLDR. We exclusively monetize on trading fees.
I see. So you have a deposit fee. So if $2 million goes in, then you take 1% of that, and that's just kind of the entry costs. So then 99% of somebody's like what they put in, that they're gonna get 99%. Actually used to buy the token. Is that how it kind of works?
Correct. Yeah.
All right. Well, I mean, that's good to know as well. And it's nice that you've got a model where everyone gets a bit of the LP fees. I mean, LPing is kind of my specialty. So I will be, anything that's successful, I will be having a strategy myself, and some of the order flow will come through my liquidity and not yours, and that's the nature of the game. Yeah. But it's good that you're sharing this. There's 3 people sharing the pot here.
Yeah. I mean, I think teams deserve a percentage of their LP. They've worked very hard to get the project across the line and have the token go live. And it's kind of an underestimated source of continuous revenue for teams that I just think they deserve. I think it's worth noting that the LP fee decays over time. So as the token increases in market cap, I think it's 50 mil. By that point, the total fee is decayed to 50 bips total. And then that has the same split with us, the team, and Combinator. So as a token increases
technology from Meteora, I think, right? That's LPing partner.
Yeah, exactly. So the AMM v2 for Meteora basically allows you to have a linearly decaying trading fee that starts at an amount that you determine and then decays to a certain amount through a preset of market cap, essentially.
Well, I mean, at the end of the day, the more you can ship, the more good marketing and hype you can have. The more people that get in early, the more they're going to sell. Then they're going to have conviction. They're going to buy back. I've seen this with MetaDAO. It does generate a decent amount of yield. So this does keep the lights on. So I like that model. Yeah. I think, sorry, anything else you wanted to add on that?
No, I actually wanted to ask you a question. I think there's a lot of conversation and experimentation around optimal LP fees at different volume ranges, market cap ranges. But given that you are an LP, self-proclaimed LP master, if you were in my shoes, how would you design LP fees for Star as well as the teams, and how would those change over time pertaining to volume or market cap? Like if you had to give, I'm interviewing you now, by the way.
Yeah.
How would you think about that?
I think the way that Meteora has done it it's good. I mean, it's new. I haven't played with it. I understand why they're doing it. The only risk is if Rishi just goes just straight and the team just locks themselves and gets a little bit of sun so their vitamin D is okay, and they just ship, then there's going to be a massive amount of volume on that. and then someone else is just going to create a pool with a lower base fee. If they have enough liquidity in there, all that's going to be happening with your pool is it's just going to be used for arbitrage. So then you're shooting yourself on the foot unless you can change the features after the fact. Like if that happens, and the way that Meteora sets it up, it's like, 1.25% effectively, because I guess that's what the range, that's what the percentage you have, and some goes to Meteora. If you have that, and then all of a sudden, this is like actual brilliant, then someone's gonna have a 0.5% pool or a 1% pool, and you're just gonna be making a couple of dollars a day or a couple of dollars an hour or something so small. So can you update if necessary?
Yeah. The LP fees can be updated dynamically.
Okay.
Yeah.
Then I think this is a good idea. It's also a good idea that it decays over time, depending on the market cap as well. So that ultimately, if you are a sizable market cap, and if nobody's coming in with more liquidity pools, which they probably will, but if they didn't, you don't want to have a high fee at a $50 million market cap. But I do think it is a reasonable price to support things right now, to have it sitting in that 1.25% range. So I like it. I think it's smart.
Yeah, cool. I think what you said was echoed by some other LP experts that we spoke to, which is that like market cap based decay is great, but the optimal thing would be just a fee that adjusts dynamically according to volume, because that's kind of where the moment where you start to see undercutting from competitive pools. So Soju, if you're listening, we need volume-based fee adjustments. So that should be the next to do for Meteora.
As in like dynamic, like as in the DLMM tech, if there's a lot of volume, it just naturally scales up, and you want that to happen with your new pool as well.
Well, with the DAMM, yeah, that's because that's a two-sided liquidity pool. When we start the raise, when we complete the raise, we take 20% of the fundraise paired with an equal amount of tokens, and then that's used to create the DAMM V2. And that DAMM V2 has a volatility-based fee. So if there's like suddenly like a lot of trading volume, it can spike up and fees can be up to 15%. We don't turn this on, but they have that feature. But it should be more, if we were to optimally design this, and this is what we want to go towards, it would be something that maybe between 0 and 1 mil volume, the fee is X, and then 1 mil to 5 mil volume, the fee is Y, and so forth. Something like that makes more sense, because it's really when the volume comes in, that's when people start creating competitive pools, just to undercut the main pool, right? So yeah, TLDR volume-based fees is what we need to move towards.
I think so. We can give Soju a timestamp and tell them to ship on that. That's a good idea.
Great.
Well, we're coming towards the end of the podcast. I think probably the most important thing would be to go over the tokenomics and like how the treasury works, unless you had something else that you thought was really important for the ICO contributors to know about.
I'm happy to go into tokenomics. I think what I would say is big week, 3 days left on the ICO. I know everyone's keeping their eyes on it, waiting till the last day, but keep those FairScores up, get those bonuses. In terms of tokenomics, should we start with anything specific, or can I just kind of dive in?
Maybe we can share a page, Adam, if you've got that available. Like specifically just like how the split is, just quite quickly. And I'd love to know, is this a similar model to MetaDAO where all of your revenue goes into the treasury, and then if you want more as the monthly stipend, then you have to have a proposal, or do you get your revenue? And then one question that was asked in the Shark Tank episode was, I'm just going to quote it directly actually. The question was, what is the value accrual for the token? Which is, So there's 3 questions here. I guess the first one is, can we just quickly discuss and show the tokenomics breakdown of like how it is, and then I'll ask the next 2, so we don't lose track.
So firstly, 60% of total supply will be going into the ICO. We're keen that actually we're going down the infrastructure route, we're going down the ownership token route. We want to give people an opportunity to get in to what we truly believe is has what it takes to be the market leader in the reputation industry, at least on Solana. 21% is reserved for the team. Now, to be really clear on the team side of things, we don't get anything at launch. Our first unlock on a TWAP basis is when we 8x price. So we launch at 1.25 mil FDV. The moment that hits 10 million, we get our first 2.5%. And it's essentially another 2x. So 16x, we get the next, all the way up until the 356x, until we hit 320 million market cap. We get the final of that 21%. Of that 21%, if we need to go on a hiring spree and incentivize the team, or once we prove ourselves and want to incentivize the team more, we can put a proposal together for the governance to actually allow us to either mint more team tokens via Futaki. 12% of supply will be in the liquidity pool, as Adam said, 20% of the raised funds from the ICO. 5% of the tokens will be in the treasury that will be controlled by the Futaki governance. Decision markets will determine what is done with those.
And as an example, that could be an exchange wants to list you. And so you might give out some as a loan to Binance or Bybit, like that.
Exactly. Yeah.
And that's a good idea because it's not in the MetaDAO model. So it makes it a little bit harder.
Mm-hmm. And then 2% will be distributed to star stakers, token hold from the StarDotFun token holders. That community, the team, everyone behind Star really kind of supported us and got us to where we are, and will continue to do so. And that is our way of rewarding them. That will unlock on a 30-day linear vesting schedule. And then finally, the 1% will be distributed to ICO participants. As we discussed, if you invest in the ICO, we'll be distributing that 1% based on how high your FairScore is.
Great. All right. That's a good breakdown. So the next question is, your revenue, does it accrue to the treasury, or does it go to the team for the team to decide what they want to do with it?
So all revenue will flow to the treasury. We have a monthly allowance of 50K that is essentially guaranteed to us, that is signed by the Futaki governance to essentially come into our multi-sig every month. Anything on top of that needs to be signed by the governance. If we decide we want to increase our allowance to 75K because we have some extra spend, that would have to be approved by the decision markets and executed by them. And then in terms of additional revenue, both from the LP, from B2B, from developer SDKs, that all flows into the Futaki kind of governance treasury, and decision markets decide what is done with that. And I guess to the point of token value accrual as well, there's a couple of things here. Obviously, as we generate revenue, the governance will determine how they want to kind of accrue that value into the token, whether it be via buybacks or anything else. That's down to the investors to kind of decide as a whole. Secondly, we're really trying to tie the Fair token into positive reputation and positive behavior, where actually users will be able to lock their Fair token via something really cool that we're building with the Streamflow team, to lock their token. If their reputation increases, they earn yield on that lock in USD Plus, to really incentivize just being better, and you actually can earn from it. So we lock tokens, users are incentivized to be better, and of course, supply kind of goes down, demand goes up. There's a small kind of level of value accrual there.
I love it. I mean, I appreciate that you had all the answers to this, because this is new and it's tricky. And what I mean by appreciate that you had all the answers, that I was kind of after. I wouldn't have I can understand the value of the traditional system of the team has all the revenue, but that's just exactly how we get these brilliant products like Dupe and Meteor and Camino. And then the token, there's no say in it. Well, look, I mean, there's probably still more questions to ask, but at the same time, this has been a pretty lengthy podcast. Adam, is there any like final things that you'd like me that you'd like to add? And also, when is the cutoff time to enter into the ICO?
I think the final thing I would like to mention, and this is maybe more pertaining to Star and why people should hold Star, is for the same reason that people should hold Fair and all other ownership tokens, is because it does give you rights over our treasury, which is visible on chain right now. And it does give you rights over our IP through a Marshall Islands futarchy governed DAO, the only jurisdiction in the world where a smart contract can be the director of a company. So we're eating our own dog food here, and I wouldn't be able to bring Rishi onto a model that we didn't understand and utilize ourselves. So Star functions in a very similar manner where our revenues flow into a treasury. We have a monthly allowance. Ours is 30K. We're a small, compact team of 4, and we're lean and mean for now. And yeah, it's the same model. Expenditures need to be approved by decision markets, as well as what the usage of our token will be. I think one interesting use case that I would like to touch on that we're exploring now is basically using Star as a work token, which means that it's not just like an ownership. It's a token that not just represents ownership in the protocol, but it's also a token that will increase in value, and by proxy of increasing in value will improve the efficacy of the product. And the way that we're thinking about this, and we'll be talking more about this soon, is basically using Star to mint and sell on the open market to invest in teams like FairScale that are raising on the platform. And the amount to mint and sell will be voted on through a quantum market. So it'll be a market that decides how much to mint and sell. And what this effectively does is this makes it so that the product gets better when the token increases in value. And inversely, when the token goes down in value, there's also downside risk. So the product also gets worse when the token goes down in value. So we're really trying to think on like unique ways to use our token. This is like probably going to be the very first experiment beyond just ownership. So yeah, much more of that to come. And on the FairScale raise, the raise is ending Friday at 6 p.m. UTC. So you've got, I think, just about 3.5 days before it closes. And yeah, we've got a lot planned for this week to show Fair at work in our own products across the ecosystem, and a lot more conversations just like this to get people bought in on Rishi and what they're building.
Well, I appreciate you've been very in depth, both of you. So thanks so much for your time. I told everyone that I would let you know what I was thinking at the end, and I would put in some funds in. I'm not going to say how much, like 8-bit penis, because I'm a doxed individual, but I think this is definitely something that we need, and I know it will take a little bit of time to improve and improve and improve. But given that you've already launched with an MVP, like that just kind of speaks volumes. So thank you for making something cool. And I want to end with, and you can add anything at the end, but I just want to end with the idea that when you're looking for something that has product market fit, a retail investor, even a liquid fund, they don't know if it has product market fit. You have to kind of go like the Steve Jobs vision, where you make something and then people realize that it's needed. And I think this is one of those things. If that makes sense, cool. If not, just the TLDR is you don't know you want it and need it until it's there. And I think this is one of those situations.
Yeah, completely agree. And we're about to show that it's there over the next few days and continue to do so. So thank you very much, Seb. Really appreciate it.
Thank you.
Yeah. Thanks for your time, Seb. Appreciate you having us on.